Good morning. This is Nick Rach with the Earnings Scout, and I'm going to show you why we rate NVIDIA, the market darling, the best performing stock in the S&P 500 this year and over the past 5 years, a strong sell with an earnings indicator score of 5 out of 100 best. First, I want to show you what's going on with the vision trends to show you this is just pure math. I know for a lot of you, you love this stock. It's been very good to you. And stocks like this that go up this high, you tend to fall in love with. I'm going to show you how you can use our objective research to kind of at least make a more informed decision if you're going to hold this stock. And we recommend holding this stock in an underweight position relative to what it's in the benchmark because it's such a large position in the S&P 500. But first, I want to show you what the earnings scores are. What are these on the chart? What does this mean? The earnings scores are measuring the rates of change to the earnings expectations for NVIDIA. And this was over the past 2 years. So back in August 26, 2022, after it reported 2 years ago, its estimates were being cut at a rate of 46.44%. This was the worst of its estimate cuts, by the way. And the worst of the cuts occurred just a few months before the stock bottom in October 2022 for NVIDIA and for many others as well. This is very normal. When we see the worst of the cuts occur, that's usually when you're at the market bottom. And then you can see the best in this range here for earnings scores last summer after NVIDIA reported its estimates were doubled, more than doubled, at a rate of 105.32%. So this is the scale we're looking at. These blue lines are in here. And when estimates are improving, or they're going from getting cut by 46.44% to up by 105.32%, this is what we want to see. Estimates going up at increasing rates or estimates being cut at lesser rates. That's improving delta. We are bullish the stock at that point. And we remain bullish the stock on NVIDIA for a while. We just removed it from our ES long portfolio in April of this year. And here's why. This is what we're noticing. Most people notice NVIDIA after it reports beats and raises estimates. That's 100% true over the last year, for sure. But what we're noticing is last summer when it raised its estimates by 105.32%, which is just remarkable. The next earnings season, the estimates overall only went up at a rate of 6.14%. And then when it reported at the beginning of this year, 20.59%, 17.17%. And then its last report in May, when it last reported May of 2024, estimates went up for NVIDIA afterwards by 13.62%. So what we see is, yes, estimates are going up, but they're going up at decreasing rates. That's negative delta. So the positive estimate revision momentum is slowing, or what we would say is weakening, all the while the price rises. So when you have a stock like this that does that, that's a divergence that we refer to as an alligator jaw opening when we have 2 or more quarters of weakening on a rate of change basis, earnings expectations, and rising price. This is our warning signs. This is why our model rates this as a sell. So if you're going to hold this name, that's fine. It's a darling. People are very, very uber bullish on AI, myself included. However, this research will provide objective analysis for you to let you know at the very least, if you're going to hold this name, you're buying this with slowing positive revision momentum. And while this stock is up 695% over the past 2 years, over 150% this year, and over almost 3,000% over the last 5 years, I want you to keep this in mind that the revision momentum is slowing and it may be time to take some profits in the name. We certainly don't want you doubling down on the name. So that's why we rate NVIDIA 5 with a strong sell. It's no opinion, it's just math. If you have any questions, please get a hold of me.